Hi everyone, welcome to my YouTube channel. My name is Tabitha. Today we are going to talk about financial situation of the investor. How do you determine the client financial position and what do you need to do before you recommend what they should do with their finances? So here we have the financial situation of the investor and what is the client's position, financial position. So we'll look at these slides today, and then you will see if you can apply it to your own financial situation. So let's get into it. So if you're new to this channel, please subscribe for more videos. So client position is evaluated through cash flow statement, and net worth statement. So today we are going to look at only the net worth statements. And then next time we will look at the cash flow statement. So it's just a simple, straightforward. If you have ever been to a finance class or accounting class, so the net worth statement will make sense to you because it's just only a statement that is made up of assets and liabilities. And then when you now make the difference, get the difference, and then you get the net worth. So this one you can also apply to your own finances, not only for the company, but also for individual personal finance. So let's see. So net worth. So net worth is the value of an individual assets after deduction of liabilities. So you add all your assets and then you also add all your liabilities. And when you get the difference, you can now get the net worth. So the net worth is that value of an individual asset after deduction of liabilities. So that's the net worth. So let's see how you can apply to it. So here, if you're individual, you have house, you have a vehicle, you take the value of those assets and then now add them up. And then you also look at the liabilities that you have. So once you add them up, you get the difference. So the value of the value that you will get there will be now your net worth. And then from there, you can now recommend what you need to do. So for your net worth to be higher, so you have to add more asset or maybe reduce your liabilities. So example of assets are things like home, investment, vehicles, fine jewelries, art. So there are many of them, those that we consider as assets. So you take the value of those items and then you record them and you know that this is your asset. Some homes are always on loan, so people only like lease the value of the home as an asset because some of the home come with equity. So if they have already accumulated the equity, you can see, oh, if you sell it, it's just going to be worth this much. So let's look at more example of assets. So the examples of assets, some of them are equipments, specialized equipments, things like cameras, things like tools. So those are specialized equipment that you can also list as assets. The art. So you have the art, you have the arts, they're also assets. And then once you leave there, you can now see the value of personal assets show a progress made in building wealth. So here, if you have been like, you have a house, you have an investment, what progress have you made by building those assets? If your asset lease is lower, what do you need to do to increase the number of assets that you have? Because this is giving more security to you more than the of information. How do you really get the information to know more about your assets? This is the reason now. So some people, they will look at the income tax returns. So when you look at the income tax return, it will show you how much money you made, and do you have your RSP retirement Saving plan statements also show you amount of the RSP that you have built. And here you have the non-registered investment account, things like maybe cash account or maybe pension accounts and all those stuff. So those one represent, so you look at those statements to get more information about your assets. So you will see how much income tax return you got, and then from your income return statement, you can check how many assets you have listed there. Of information about the investor's personal assets are plan statements. So you can check the pension plan statement. It will give you more of the income that you get. Bank statement is look at the bank statements. How much cash do you have? How much GIC do you have? So you can check those ones, and then you can see in life insurance policies. So me personally, I have a life insurance policy, and I've been paying it since January 2019. So you can check that one too, and check how much the face value of the insurance is always once. Mine is fixed, right? But some insurance, they come with the investment part where you can also check how much funds have you accumulated over the years. Other asset sources. So other asset sources, you can also check that to get more information about the investor's personal assets. Another one will be a review of liabilities. So you have to review the liabilities so you can see how many liabilities do you have, how long are you going to pay them back, is it the liabilities that help you build assets? Because there are some liabilities that help you build assets, and those are considered good ones. Liabilities are debt and financial obligation that must be repaid. So when you look at that, you have to repay those liabilities. So let's go ahead. You're reviewing your liabilities. So what do you check? What are these liabilities that you check? So they have been categorized. Liabilities has been categorized into good debt and bad debt. So good debts are things that are considered to be helping you build assets. So that one is a good debt. It's borrowing taken on to increase assets. Those are mortgages. Some people take loan to start the business. Other people do yes, they take loan to start the business. So would mean that loan can help them create their own income. Bad debt is that the one that depleted they deplete incomes and financial resources. So things like credit card. So maybe your credit card, you're just using it for other things that is not giving you back then that is not giving you back the asset. So those are the two type of liabilities. So once you get those one, you add them up, and then we can now take the difference between the liabilities and assets. So the sources of information about investors' personal liabilities, you can find them on the mortgage statement. Mortgage statement will tell you the amount of the money that you owe, and you also line of credit statements, so on and so forth. Credit card statement. So those one will give you more information on about an investor's personal liabilities. So in this video, the common goal for financial planning is to increase net worth to achieve financial objective. So planning is to increase, you have to have your financial plan. So even you can do your own personal plan, so you can check Where is your net worth? What are you really actually building? So if I have debt and I have assets, so the difference between my debts and my asset will give me my net worth. Do I look like someone who can retire earlier? Do I look like someone who can leave their job and work independently because they have the security? So those are the things that you need to ask yourself when you're doing your financial planning things. So you have to add up all your liabilities, add increase assets, look at the assets and those that then you get the common goal. I already finished. So those are the things. So now when you look here, you can now add up your liability. This table, you can use it if you want. You can check what are some of the liabilities that you have. So when you look at the assets, so this is what you are really building. This person have a life insurance of 104,000. Oh, made a mistake. It's not a million. It's the 104,000 RRSPs of 30,300, TFSA of 11,000. Total asset is 1,145,300. So those one sum up the assets. So the asset is 145,300. So the liabilities, they have the old like 1,679.25 CIBC, 1222760 CIBC, Tangerine 331, and student loan 53, and BMO credit 2,500, PSBC MasterCard is 1,400. So when you add it up and you add everything, it brings you back to the debt of 6462. So when you make the difference, this person has a net worth of 84,235, and that is 8 cents. So that is their net worth. So this person is really actually better off if they have to stop today, and then the insurance pays, RSP is there, TFSA is there, so there will be 84,235. So that the net worth. So if you like this video, you can stop and subscribe for more videos, and I will see you